We are all familiar with the saying, it takes money to make money. However, with cryptocurrency trading, you don't necessarily need a large amount of capital to grow a small account and generate substantial income for yourself. The key is to know how to do it properly. In this video, I'll be leveraging my long-time experience as a full-time day trader to demonstrate how to grow a $100 account into a $10,000 account. I'll share how to gain access to capital, the strategy one used to safely grow accounts, and a system you can start using today to take trades. For most people starting their trading journey, the biggest challenge is having enough money in their account. I'll demonstrate how you can safely take trades using $10,000 worth of capital, even if you only have $100 in your account. The first step you need to take is to look for the best crypto trading exchange platform that offers great benefits, like Bybit. I believe they offer up to 125x leverage on some pairs, although we typically only go up to about 50x. If you can find much better offers than this, then go for that one. Understanding this concept is crucial when starting out in trading. Without it, you're likely to lose money. So pay close attention. Let's take my trade as an example. I typically risk $500 per trade in an attempt to make between $1,500 and $2,000 per trade. However, if we're working with a $100 account, we can only risk 10% or $10 per trade. This means we need to determine how many coins to buy to keep our risk at $10. Let's set aside trading systems for a moment and focus on buying ApeCoin at a particular level. We want to set our stop loss at a lower level, which means that we will sell our position if the price drops further. We also want to take profits at a particular level. We can find the difference between these values, which is 0.057 in this case. Next, we need to determine how many tokens to buy to only risk $10 per trade. To do this, we divide the dollar amount we want to risk per trade by the difference between the entry and stop levels. It's important not to make the mistake of buying only 250 or 1,000 coins, as we won't be able to properly manage our risk and reward, which can lead to losses. To avoid this, we need to have a set dollar amount for our trades. To determine the capital requirement, or the amount of money needed for the trade, we multiply the number of coins by the entry price. For example, if we want to buy 175 coins at a price of 3.35, we need $587 for this trade. However, we still need to figure out how to enter this position. When we utilize leverage, the only thing that changes is the amount of money we need to put into the trade. For example, if we have a $100 account and use 100x leverage, we now have $10,000 to use. This is because if we only had a $100 account, the $587 capital requirement for the trade is already 5x the size of our account, making it impossible to enter the trade without leverage. Let's take a look at Bybit and use the APE trade as an example. We need 175 coins, and the capital required is $586. Now, when we open up our leverage, we'll receive a warning that liquidation is high. However, as long as we're entering and exiting our position with a clear plan and we're risking only $10, then we're making a safe and responsible trade. So, the leverage capability allows us to only use $12, which is 12% of our account, for this position. It's important to note that using leverage does not change the risk profile of the trade. Before we dive into the trading platform, let's discuss some important rules for growing a small account. Firstly, I recommend starting with a 10% risk per trade based on your starting balance. For example, if you have a $100 account, take a $10 risk per trade. Once your account doubles, adjust the dollar amount at risk to 10% of the new balance, such as $20 for a $200 balance. It's crucial to get comfortable with this dollar amount before scaling up further. Secondly, it's important to recognize your psychological threshold for risk. Losing a certain amount of money in a short period of time can cause emotional reactions, even if the math says it's acceptable. It's crucial to avoid these emotions and remain disciplined while trading. Lastly, suppose you work your way up to a $1,000 account, and 10% of the balance per trade is $100, which is still too much for you to handle psychologically. In that case, it's better to use a smaller percentage until you feel more comfortable. Stick with a dollar amount that you're comfortable risking, and don't exceed your psychological threshold. For example, if you want to make $3,000 to $5,000 per week, you might use 2.5% of your entire account balance, which is around $20,000 for me, and increase it over time to try to double your income. To start with, we need to identify a newly established uptrend in the market. Once we find that, we can proceed to identify our wave count. For instance, if we consider our starting wave as 1, we can find the first pullback as 2, the largest waves as 3, the pullback as 4, and the high as 5. We can try to locate the top of the 5th wave by using a Fibonacci projection off of our 1 wave. To do this, we can click on the level where the price action has consolidated along with our 1 value and find our factor of 1. If the price action falls below the 61.8% retracement level after we take a Fibonacci retracement off of this level and go up to the high of 1, we will want to target the 261.8% range. We can observe that 3 and 4 reacted here, and then 5 came up, followed by a consolidation phase. Once we have confirmed that wave 5 is here and we get a pullback to this area, we can click a trend off of the high of 3 and down to the low of A. This will give me a channel of price action to follow. Then, I clone this up by right-clicking on it and put this at the high of 5. Next, I set my entry to get short, which means I want the price to go down, allowing me to make money. I place my stop loss just over my 5, and my profit target is to be determined. If the price hits the 61.8 level, I get short and set my stop loss to get out of the position just over my 5. To execute this strategy on Bybit, I click the Sell Short button at the 41 cent level. Next, I'm going to calculate my position size. To do this, I'll take the difference between my entry price of 0.411 and my stop loss price of 0.4203, which gives me the value that I'm risking on this trade. Then, I'll divide my $10 risk by that value to get my unit amount for a $10 risk on this trade. In this case, I need 1,000 XRP tokens with my 10x leverage, which will cost me $37. I can increase this to $50 and hit confirm. Now, my capital requirement for this trade is $8, and I'll put my stop loss at the 0.42 level. I'll hit the Open Short Position button, and that will allow me to profit if the price of XRP goes down to my profit target. Keep in mind that this system can be used to trade both sides of the market. If I fast forward through time, I can see that the price comes down and breaks through the A level. This is when I can start setting my profit target by using the trend-based FIB extension. I'll click from the high of B down to the low of A, and then up to the desired level. So, the next step is to apply the Fibonacci retracement from the overall trend up to the high point. As we can see, the 61.8 level coincides with the 261.8 projection from our A and B levels, which indicates our profit target for C. It's essential to learn Fibonacci if you want to succeed. As we move forward, the price retraces and tests our trend before experiencing a massive drop overnight. The price breaks the low point, and we see a bottom formation before hitting our profit target precisely. Afterward, the price started trading higher again. So as you can see, with this trade, you could have made a profit of $41 while only risking $10. This is a 4-to-1 risk-reward ratio, which means that even if you're wrong more than half of the time, you can still break even by being right only 20% of the time. If you're right 30% of the time, you can be profitable, and the higher your accuracy, the more profit you can make over time. You can use a table like this to calculate how much money you can make with your system over time, and by following the proper sizing and rules, you can turn a small account into a much larger one. It's important to learn these techniques and avoid misinformation if you want to grow your account. Thank you for watching, and I hope it was helpful. If it was, let me know in the comments. Stay tuned for the next video, and have a great day. See you soon.